as of Friday, it was 40% for the XAU and 14% for the S&P.
Wow.
So basically three times. Would you know that from reading the Financial Times or watching CNBC? I
No.
have no clue. But even though they've outperformed, they're still very, very undervalued. They're still cheap on a value basis. They're cheap relative to their own history. And of course, as we've said before, the margins are expanding. So I think you're going to see money once the market stabilizes and you don't have the margin calls anymore. The money's going to start flowing into gold and silver.
Gold prices continue to reach new highs as geopolitical risks and economic uncertainties drive demand. However, analysts caution that investors looking to capitalize on this rally through mining stocks should proceed carefully, as not all companies in the sector share the same growth prospects. Adrian Day, founder and president of Adrian Day Asset Management, highlights a recurring market pattern. During sharp market declines, gold and silver stocks often pull back alongside broader equities. However, once margin calls are settled and selling pressure subsides, these stocks tend to be among the first to recover. Meanwhile, physically backed gold exchange-traded funds have gained significant traction. According to the World Gold Council, gold ETF investments surged to a 34-month high in February, totaling $9.4 billion. This marked the third consecutive month of inflows, pushing total assets under management to a record $306 billion. Holdings increased to 3,353 tons, the highest level since July 2023. Asian investors played a key role in this rally, adding $2.3 billion to gold ETFs in February. Despite strong equity market performance, particularly in AI stocks amid the DeepSeek frenzy, China's soaring local gold prices drew significant investor attention. North American demand also surged, with $6.8 billion in inflows, the most significant single-month increase for the region since July 2020 and the strongest February on record. However, despite gold's strong performance, sentiment around gold mining stocks remains bearish. Day points out that while gold mining ETFs have outperformed the S&P 500, they have yet to attract significant investor interest. The GDX and GDXJ ETFs have seen no net inflows this year, with GDX alone experiencing $1.7 billion in outflows. Yet this negative sentiment may not persist indefinitely. As market conditions stabilize, capital is expected to flow back into gold and silver investments, aligning with historical recovery trends following market downturns. While gold's rally signals strength in the precious metals market, investors should weigh the risks carefully, particularly when considering mining stocks. The current divergence between rising gold prices and weak sentiment in gold equities presents challenges and potential opportunities for investors navigating the sector. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I mean, we're already seeing a sharp decline. If we have a sharper decline in the broad market in the S&P, I think it's going to start to bring everything down. We saw gold fall today. Because anytime you have a sharp decline, especially with the incredibly high levels of margin that we have in the US, I don't know if you have the same in Canada. I suspect not to the same extent.
Right.
But you know, the level of margin in the US is record highs. And it's not just sophisticated investors who are using margin, but the level of margin at IB, Interactive Brokers, and the Robinhood is at all-time highs. So when you have high levels of margin, when stocks drop, people have to sell, right? They have to sell. There is no choice. And they have to sell that day, the day they get the margin call.
Right.
And so everything tends to go down. You know, physical gold frequently, as we know, we saw this in 2008. Physical gold is often drops sharply at the beginning of a market crash because it's such a liquid asset. And in this case, it's held up well. So people say, well, okay, I can sell a little bit of gold to meet my margin call. So I wouldn't be surprised, sorry, just to sum it up, I wouldn't be surprised if we got a bit of a pullback in the gold stocks. If we see further downside in the S&P, we'll see a bit of a pullback in the gold and silver stocks. They will be the first to recover. As the margin calls get all played out, and so people, you know, the margin comes down a lot, the market's down, people then start to say, okay, where should I now put my money?
Yeah, right.
I'm going to put them back in the Magnificent Seven, I don't think, but they're going to look for sectors that have lagged. It could be dividend stocks, value stocks, global stocks, Asian stocks, and commodity stocks. And so they're going to start putting their money into sectors that have lagged or are cheap. And there's no question that even though the XAU and the GDX have not exactly lagged, as I point out many times, the XAU over the past 12 months has the performances more than twice that of the S&P.
Wow.
In fact, as of today, it's probably 3 times. As of Friday, it was 40% for the XAU and 14% for the S&P.
Wow.
So basically 3 times. Would you know that from reading the Financial Times or watching CNBC?
No.
I have no clue. But even though they've outperformed, they're still very, very undervalued. They're still cheap on a value basis. They're cheap relative to their own history. And of course, as we've said before, the margins are expanding. So I think you're going to see money once the market stabilizes and you don't have the margin calls anymore. The money's going to start flowing into gold and silver.
Adrian Day emphasizes that while tariffs can be a tool for trade negotiations or revenue generation, their effectiveness and political consequences require careful consideration. Imposing tariffs on friendly nations as an initial move may not be the most strategic or diplomatic approach. Tensions between the United States and the BRICS economic alliance continue to escalate. The U.S. threatens 150% tariffs on the bloc, citing concerns over de-dollarization. In response, Brazil, set to chair BRICS in 2025, has reinforced the bloc's commitment to reducing reliance on the U.S. dollar in global trade. This ongoing standoff is heightening geopolitical tensions, influencing global market sentiment. Amid this confrontation, the U.S. is also reassessing its trade policies with key allies. After briefly pausing them, Washington reinstated import tariffs on Canada and Mexico. At the same time, the U.S. and the U.K. are working toward a new trade agreement. UK Prime Minister Keir Starmer's recent visit to the U.S. saw both nations commit to a deal to balance trade and prevent potential tariffs on European imports. Let's get back to the interview.
I mean, there's an easy way to solve this. You just get Senator Rand Paul and Senator, what's the name of the guy that said he was refused access? But just get a couple of people like that everyone trusts, take the television cameras and just go in there and film it. Now, as you know, and probably most of your people know, not all of the U.S. gold reserves are held at Fort Knox. They're held at different bases around the country. West Point has some, Denver has some. It's not beyond the wit of man to have a proper full audit with cameras, filming, and everyone can say, okay, we agree, it's there. I've since found that there are some people more extreme than I am, but so I believe anything, frankly. But in this case, I just think it probably is there. But it's easy to find out and resolve the situation. If the gold is not there, it is, or if in fact the bars have only recently been transported in the middle of the night, then I think it's incredibly bullish for gold. Fundamentally, I think tariffs are bad. Now, I do think that it's bad to sort of impose tariffs on, the first tariffs imposed are on your friendly neighbors. I mean, what's Canada ever done to the US to deserve this, right?
Right.
I think the problem is we're getting a very mixed message from the Trump administration on tariffs.
Right.
Are they meant to restrict access to Chinese products for national security reasons? Is it meant to equalize? France imposes larger import duties on California wines than the US does on French wines. So is it meant to just equalize? Or is it meant to be a blanket thing? Or is it meant to punish Canada and Mexico or encourage them to take more action to control the border?
Right.
It's just a blanket thing to a way of raising revenue to replace income tax. Now, if you look at the law, and the message from the Trump administration has been very mixed. Now, frankly, if there's a lot of countries in the world like Bermuda, Bahamas, the Cayman Islands, countries that we think of as pretty free market and pretty free market countries, and they get most of their revenue comes from import duties. Right. So I lived in the Bahamas. You didn't have any income tax, no capital gains tax. I don't think there was a tax on dividends or interest. People didn't have to file income tax returns or anything, but the government funded itself through import duties and real estate taxes. Now, if you're saying we want to replace the income tax with import duties, from an economic point of view, that's a positive thing because taxes on production, namely income tax and capital gains tax, taxes on production are the worst type of taxes. Taxes on consumption, from an economic point of view, are much, much better taxes if you have to have any taxes at all. And tariff sounds like so harsh and punitive. Customs duties just sounds like another tax. They're the same thing, right?
Yeah.
Whatever word you use. Now, the reality is that the US cannot replace its income tax with tariffs. I saw a calculation today, someone said, and again, assuming everything stays the same, that you don't impose taxes and then reduce the number of imports. But if the number of imports remained exactly the same, you'd have to have an import duty of 73% to replace the income tax.
As gold continues its upward trajectory, the disconnect between bullion prices and investor sentiment in mining stocks presents a complex landscape. While physical gold investments gain momentum, skepticism surrounding gold equities persists despite historical recovery patterns. With shifting market conditions and economic policies influencing capital flows, the coming months could determine whether mining stocks catch up to bullion strength or remain overlooked. Will the ongoing rally in gold eventually spark renewed confidence in mining stocks, or will cautious investor sentiment keep them lagging? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.